Hello and welcome to Investors Hangout, your weekly guide to making smarter financial decisions. This series is brought to you by Aditya Birla Sun Life Mutual Fund and Value Research. Today we are talking about small cap funds, which have given spectacular returns in the past, but now investors are asking if they should stay invested, book profits, or pull out their funds. So Dhirendra, first up, small cap funds, they have given phenomenal returns in the past. What really drives this rally?
Small caps have always given handsome return over a long period of time. And in a brief period of time, and when the market gets very difficult, they fall the most. So if you look at short term, small caps could be a massive blow. But what is driving the market? They were reasonably priced. Investors are putting money in small cap funds as if, there's no tomorrow. And it's a very normal thing. It happens all the time. When something does well, investors chase that. Chasing performance is investors' favorite pastime. And small caps have done well, so investors are putting their money in. There is a case for it. One is that over a long period of time, small caps do well. Third thing is that, if you look at the optimism around India story, it is not centered around the big companies. Big companies will get bigger. But small companies, when they turn bigger, they become multi-bagger. Right. And that is the story of small companies. That is the story of mid-sized companies. When they turn big, they make it really, they become big, very substantially rewarding for investors. The only catch is that, they have become very expensive. And it is a natural fallout of investors chasing a particular segment of the market or a niche of the market very aggressively. So they're no longer cheap. And if the story gets derailed for a while, or if there is any kind of economic headwind to this, it might turn out to be disappointing for recent investors.
So you're saying they're no longer cheap. Are they overheated right now?
Yes, one CIO actually came and made this big announcement, and that reinforced the whole feeling. So there are many small companies which may not look cheap. But it is very wrong to generalize small caps. We can generalize many other segments of the market, many sectors, but not small cap. Because every small cap is unique. The margins, the story, the moat, the competitive advantage that they enjoy, that makes every company completely different. There could be 100,000 crore, a small cap company running a set of restaurants. It's very difficult to compare it with another company which is making adhesives, which is making stationery. It could be any company. It's not a sector. Small cap is not a sector. Small cap is a bunch of smaller sized companies. Right. And the smaller sized companies, the universe is so massive. First 100 companies are called large cap by definition of the law, by the regulator. Next 150 companies are mid caps. Rest, all the 3,000 companies and more than that are small caps. So they are very diverse. They are a great opportunity. They are also under-researched. There is great premium for discovering a story early than others. So I would not say they are expensive. But there is a possibility that relatively better known small caps might be expensive because more investors are chasing it and many fund managers. And there could be a small element of trend driving it. As more and more investors start pouring money in small cap fund, and some small cap funds have become so big. And because they have turned big, they have to buy larger small caps. Of the small cap lot, they will be buying companies which are in the top tier. And that might be expensive, and they will be buying it purely because of their compulsion, purely because they have to be liquid. They have to make sure that their portfolio is of a quality which people can relate to. If there are many unknown names, there will be concerns about the quality. They will also be, that also makes those portfolios more resilient in downturn and, about turbulent times.
So is it in any way starting to look like a bubble?
I would not say bubble because the universe is so large. There are about 600 companies in which the small cap portfolio of mutual funds, small cap mutual funds is spread. And given the prolonged, up momentum or upswing in these funds, there's a possibility that, 10% of the portfolio will be obscenely priced. But, in case of stock, what happens is the primary driver of a company's stock price or justification or rational is in earnings. And earning is not a static thing. I would not say bubble, but a small number of companies, when you are actually betting on high growth segment of the market, even in the worst of market, there is a bubble.
So, given this scenario, the present situation, what should investors do? Should they continue their SIPs or should they exit now?
If you are doing your SIP with 7 years and more, carry on. If you are likely to need the money in next 3 years, consider taking out a part of it. If you are likely to need a part of it, simply because you just don't want to be unlucky, inopportune when you need the money. And small cap is not the best of place for stability because it will be turbulent. If you need the money in 3 years' time, and after 2.5 years, market goes into a tailspin, small caps will fall faster, will fall more than that's the tradition, that's the conventional way it has been behaving. It delivers superior return. When the market comes back, it grows faster. 5 to 7 years or 3 to 5, 7 years. Be wary. Make sure that all your investment. Because what happens is most new investors, when they started investing and it has done well and it is doing well, they think that is it. You have to put all your money. No, you need diversity in your portfolio. Just set up your portfolio on Value Research Online. It can be done in a couple of minutes. Put your PAN, phone number, and your portfolio is ready to check. See how much of your money, overall money, by virtue of having multiple funds, stocks, NPS, everything, how much of it is in large cap, mid cap, small cap. If small cap exceeds 35-40%, then maybe reduce it a little bit. And that's about it. I think, if you are diverse, if your portfolio is diversified, don't worry much. Okay. Make sure that it's not 100% small cap.
Right. So it has to be measured and intentional and not all in or all out. Okay. So, but many investors are also wondering, in the current scenario, what might trigger a downturn in small caps?
Market never goes up on a single good news. You need good earnings growth. You need low interest rates, traction for a company. Investors need to be excited about the markets and they're putting money. And most of those variables are there. For something to be, which will create some kind of sustained downturn or disappointment if companies stop, generating returns, if they stop making, growing their earnings. If interest rate goes up, I don't see any investors get less excited. They stop putting money. We see big, massive outflow. The one good thing about small cap is that the whole small cap rally is not held hostage by foreign investors. So my understanding is that even if we might see some segment of the market or small cap universe getting upset or unnerved by some kind of fear mongering or deceleration of earnings, but without decelerating earnings for a sustained period, unless we see 4 quarters of decline in earnings of many of the companies which are prominent in the small cap universe, I don't see anything else potential to puncture this momentum. We are guessing that this might be expensive. With earnings growth, it might turn out to be cheap. There is a possibility that market never corrects and the small segment does not correct because promoters are optimistic about their companies, domestic investors are putting money, organized money is pouring into this company, then they are able to grow their earnings. When I look at the market capitalization of these small cap companies, the large cap and the mid cap universe, they account for about 89% of the market cap universe. So the remaining 10% of the large universe account for a very tiny part. And if that grows, I don't know what will happen. So these are in short supplies and a small part of it could be very high quality companies now. There's one more interesting thing which is happening to small cap universe. Because of for the first time in the last 20-25 years, I have seen this kind of massive domestic regular flow into these companies' stock. As a result of which, many promoters who have never seen their stakes worth rising to that level, many of them have actually started thinking very imaginatively, because rising stock prices of a company of which you hold 55%, 60%, it is suddenly a currency in your hand. You can dilute 5% to add a capacity. Get ambitious about your business. And when the market gives a premium to your stock holding, you start thinking very differently about your companies, how to run your company. Before that, you used to run like an owner. You used to run like an owner in terms of how much money you make. Of course, you think like an owner, which itself is a great mindset. But thinking like a owner and getting rewarded by the stock price and the rising market capitalization is also beginning to have an impact on, because I've met many promoters of these small size, mid-sized companies, and I find them to be in a fairly good state of excitement about their future and optimistic, which I think is a very desirable frame of mind to be in.
So to wrap up this conversation, what would be your one-line advice to small cap investors right now?
One is that make sure that all your money is not 100% into small cap. If you are very optimistic about small cap, make sure that it does not exceed 50%. If you have invested in small cap with less than 3 more years to remain invested, start reducing. If you have invested with 10 years and more in mind, carry on. Don't worry. Do it with precision. Because you will have exposure to small cap from a flexi cap fund. You will have exposure to small cap from a multi cap fund. And then you will have small cap fund itself. Then you might have bought some thematic fund from some sector fund or some trendy fund, some index fund. And small sized companies could be in any of these portfolios. How much you exactly own? Make sure that at least you should have 25-30%. Make sure that you don't exceed beyond 50%. If you are investing, you are likely to need a part of your money in the next 5 years. If you are investing for 10 years and more, maybe maintain it at 50% and be very regular about investing. Don't try to make lump sum investments at all.
Okay. Well, thank you, Dhirendra, for this conversation on small cap funds. If you were also wondering what to do with your small cap SIPs, we hope we've answered that query. Now moving on to the viewer's question. Parampriya says, after watching your videos, I started investing for my dad in an aggressive hybrid fund in 2017. It was a bumpy ride during the COVID times, but we navigated it well. I was a student then, but now, after a stable job of my own, I'm planning to start my first SIP. I noticed you are vouching for multi-cap funds for better diversification. So my query is about the risk they carry with 50% allocation to mid and small caps and their size. What if the AUM becomes huge?
It has all the scalability. It is not much of a risk. These multi-caps can retain 50%. In case of equity, or particularly in case of equity fund, we have this risk of impairment, the risk of loss. Volatility is not risk. When we are talking of small cap, they go up and down. The real loss of investing in small cap is when you buy a small company and it goes bankrupt. It goes down to zero. When you invest in a mutual fund and it turns out to be volatile, then you are basically taking a risk that do you have that time that you can tide over that time frame? Because mutual fund, unlike a company, does not have the constant makeup. It is made up of 20 companies. It is made up of 50 companies. It is made up of 100 companies. In fact, we have the largest small cap fund in India, which has about 350 stocks. In fact, it is run by 4 fund managers and their portfolios are divided among 4 people. You get the same NAV. So of those 350 companies, there will be many companies which will be 3%, 4% of that. And when that happens, assuming one company dies, you won't even get to notice in the NAV. That is the diversification which is taking care of it. Now, there is a risk in small cap. If you invest for 6 months time frame, and in 6 months it can go down by 25%, and it has happened in the past, it will happen again. But if you come with an understanding that what are you invested in? These are high growth companies of small sized, and if you hold it for a period of time, this market madness, you will be able to, if you come with this belief, that risk isn't there. If you come with the belief that it has gone up and it will keep rising, and if you invested and then it went down by 20%, you will run away. Understanding changes your perception of risk. The small cap fund risk is of a different kind. It is not the risk of losing your money forever. It is not being able to hold it for a period of time where you will be able to tide over that decline in value. So, invest in multi-cap with confidence. Here is a fund which will necessarily remain invested in small caps and mid caps as mandated by the law to the tune of 25%. Large caps can be 50%. And because this is the thing, this is the complexion. So assuming, let's just think of, the small cap, assuming that a great fund can be managed not more than 20,000 crore. Which means that till a fund becomes 80,000 crore, it's fine. Because 20 crore small cap, 20 crore mid cap and another 40 crore. So up to 80 crore, it has scalability, assuming. By the time this fund becomes 80,000 crore, then the small caps market capitalization will grow. They will also become bigger, and the universe will turn bigger. So things are dynamic in the market, and volatility is not risk, is my core point.
Right. That's all we have for you in today's episode. Keep watching this space for more information. If you like the show, do subscribe to our YouTube channel. Thanks for watching. Bye for now.